Brent crude oil is a significant oil benchmark. It is one of the most widely used benchmarks for oil prices globally, setting the standard for oil trading and pricing. It influences global oil prices. Traders and investors around the world look to Brent crude prices to make informed decisions about buying and selling oil. It serves as a reference point for buyers and sellers. This benchmark helps ensure that oil is traded at fair market value, providing a common ground for negotiations. Its origin lies in the North Sea. The Brent oil field, discovered in the 1970s, has been a cornerstone of the oil industry, contributing significantly to the global oil supply. Brent crude's influence extends beyond its production region. It is transported across the globe, connecting producers with consumers in various countries. It impacts oil prices worldwide. The price of Brent crude is a key indicator of the health of the global oil market. Understanding Brent crude is crucial for analyzing energy markets. Analysts and economists closely monitor its price movements to predict trends and make forecasts. The global economy relies heavily on oil. From transportation to manufacturing, oil is a vital resource that powers industries and economies. Brent crude plays a vital role in this. Its availability and price can influence economic growth and stability. Its price fluctuations have far-reaching consequences. Changes in Brent crude prices can affect everything from fuel costs to the price of goods and services. These consequences impact consumers and businesses alike. Higher oil prices can lead to increased costs for transportation and production, affecting everyday life. Therefore, monitoring Brent crude prices is essential for global economic stability. Policymakers, businesses, and consumers all keep a close eye on these prices to navigate the complexities of the global economy. Recent times have witnessed a decline in Brent crude oil prices. This decline has sparked concerns among industry experts. Several factors contribute to this downward trend. Understanding these factors is crucial for mitigating adverse effects. Supply and demand dynamics play a significant role in oil price fluctuations. When supply surpasses demand, prices tend to fall. Conversely, when demand outstrips supply, prices rise. Analyzing these dynamics is essential for comprehending oil price movements. Increased oil production is a major factor in the global energy market today, contributing to the decline in Brent crude prices. The dynamics of oil prices are influenced by a multitude of factors, including market demand, geopolitical events, and economic policies. Several regions have ramped up their oil production in recent years. Countries like the United States, Saudi Arabia, and Russia have significantly increased their output, making them key players in the global oil market. Technological advancements have made oil extraction more efficient and accessible. Innovations such as hydraulic fracturing, horizontal drilling, and enhanced oil recovery techniques have revolutionized the industry. This has led to a surge in global oil supply. The ability to store and transport large quantities of oil has also improved, ensuring that supply can meet demand more effectively. OPEC, a group of major oil-producing nations, plays a crucial role in regulating oil supply. Their coordinated efforts to manage production levels aim to stabilize the market and control price volatility. Their decisions on production quotas significantly impact global oil prices. When OPEC decides to cut or increase production, it sends ripples through the market, affecting everything from gasoline prices to the broader economy. Additionally, the emergence of new oil sources, such as shale oil, has further contributed to the supply glut. Shale oil extraction, particularly in the United States, has added millions of barrels per day to the global supply, challenging traditional oil producers and reshaping the energy landscape. Alongside increased supply, declining demand is another key factor influencing Brent crude prices. Global energy consumption patterns are changing. Renewable energy sources are gaining traction. This shift towards cleaner energy alternatives is gradually reducing reliance on fossil fuels. Economic slowdowns in major economies also contribute to reduced oil demand. During economic downturns, industrial activity and consumer spending tend to decline. This, in turn, lowers the demand for oil and its byproducts. Section 5. Geopolitics and oil, the influence of global events. The oil industry is deeply intertwined with global politics, and the ripple effects of geopolitical events can be felt across the world. Geopolitical events can significantly impact oil markets. For instance, a sudden political upheaval in a key oil-producing country can send shockwaves through the market, causing prices to fluctuate wildly. Political instability in oil-producing regions can disrupt supply chains. When governments are overthrown or civil unrest breaks out, the production and transportation of oil can be severely affected, leading to shortages and price hikes. Trade tensions and sanctions can also influence oil prices. When countries impose sanctions on oil exports, it can limit the supply available on the global market, driving prices up. Conversely, the lifting of sanctions can flood the market with oil, causing prices to drop. The interconnected nature of global politics and energy markets is undeniable. Decisions made in one part of the world can have far-reaching consequences, affecting economies and consumers everywhere. For instance, conflicts in the Middle East, a major oil-producing region, can lead to price spikes. The region's geopolitical significance means that any disruption can have a profound impact on global oil supplies. Similarly, trade disputes between major economies can disrupt global oil trade flows. When major players like the United States and China engage in trade wars, the resulting tariffs and restrictions can hinder the smooth flow of oil, affecting prices and availability. These events underscore the volatility of oil markets and the influence of geopolitics. Investors and policymakers must constantly monitor global events to anticipate and mitigate the impacts on the oil industry. Understanding these dynamics is crucial for navigating the complexities of the global energy landscape. Section 6. Stabilizing the market. Addressing the supply-side challenges. Addressing the oversupply of oil is crucial for stabilizing Brent crude prices. OPEC members can cooperate to adjust production quotas. This coordinated approach can help balance supply and demand dynamics. Investment in new oil exploration and production should be carefully considered. While technological advancements are essential, excessive investment in a saturated market can exacerbate the supply glut. A balanced approach is necessary. Section 7. Transitioning to the future. Investing in renewable energy sources. Promoting and investing in renewable energy sources is crucial for long-term energy sustainability. Governments and businesses should incentivize the adoption of solar, wind, and other clean energy alternatives. Transitioning away from fossil fuels is essential for mitigating climate change. Moreover, it reduces reliance on finite oil reserves. Investing in renewable energy technologies will create jobs and foster innovation. Section 8. The need for collaboration, international cooperation in energy markets. International cooperation is paramount for addressing the challenges in the oil market. Dialogue and collaboration among oil-producing and consuming nations are essential. Sharing knowledge and best practices can enhance market stability. Establishing transparent and predictable energy policies can foster investor confidence. Open communication and collaboration can help mitigate price volatility and ensure energy security for all. Section 9. Conclusion. A call for sustainable energy practices. The decline in Brent crude oil prices presents both challenges and opportunities. While it may benefit consumers in the short term, it raises concerns about market stability and the need for a sustainable energy future. By embracing renewable energy, fostering international cooperation, and adopting responsible consumption practices, we can navigate the evolving energy landscape and ensure a brighter future for generations to come.